Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, the stock on our radar this morning is Lupin. Sank in trade yesterday on the back of the warning letter that came from the USFDA for their Goa and Indore units. What are the brokerages making of that? Well, Ekta, yesterday we saw that 17% decline, not just in Lupin, but even the pharmaceutical stocks. All of them saw a bit of a pressure. What are the brokerages making of this development?
Well, you know, it's very interesting because I did hear the call which Cipla held as well as Lupin held. And for Lupin, you know, the call was very interesting because the management said that they are going to look to resolve this particular warning letter as soon as they can. So, for example, it generally takes maybe 18 to 24 months. They would look to do those retrospective studies which are needed and probably try and call the USFDA if they need for a reinspection within 6 months or after 6 months. So, as of now, plus there is one particular drug called levothyroxine, thyroxine, which is actually not filed from either of these two facilities. Hence, that particular drug could probably see a launch in FY19. So, that is probably safe. So, that's another positive. Credit Suisse has upgraded the stock to neutral from underperform. They've cut the FY19 estimated EPS, but they think that you know, the value of the ex-US business stands at around 600 odd rupees. So that is a positive. You know, the value of the ex-US business stands at around 600 odd rupees. So that is a positive. Plus the particular drug that I referred to is safe. CLSA, for example, has also maintained its buy call. They've cut the target price to 1,030 versus 1,260. They've cut the FY19-20 EPS, but they believe there is a favorable risk reward for Lupin going forward. Macquarie also maintains its neutral stance. They've cut the target price. According to them, the FY19-20 US sales estimates have been cut by $130 million each. They've cut the FY19-20 EPS as well. So based on exactly what the brokerages are saying, you know, they're largely split between, split in the middle in terms of what would happen for Lupin. But considering the fall that we've seen for Lupin, considering that one of their key drugs is safe in terms of FY19 launches, we could probably see some amount of bottom fishing at these current levels. So maybe that would be something that we'd be watching out for.
All right, Ekta, thanks a lot for that. We'll keep an eye out on Lupin and the whole pharmaceutical pack in trade today. But the one stock that will be in focus today on the back of earnings will be Ashok Leyland, reporting its second quarter numbers today. Naveen, what are the expectations? The stock's seen a massive rally of around 52, 53% from the start of this year itself.
Totally. In fact, 50% in the last 6 months. So if you see decent set of numbers, consistency is what we are expecting for Ashok Leyland. In terms of the revenue, the important point is that 33% is what the street is expecting, out of which 23% is already the jump that we have seen in the volume. So 10% realizations. Why? Two key reasons. One, they have taken timely price hikes in the last 3-4 months. Apart from this, also the product mix for the company, that has been changing and improving for the better. So over there, that is the reason why we are expecting revenue growth of 33%. Apart from that, margins are expected to be around 10.8% versus 11.6% year on year. Why this 80 bips fall? One key reason being the raw material prices. But remember, there is an element of positive surprise that we can expect given what happened with Hero. Remember, there will be some tax implications. That is what I'm understanding from analysts, which will lead to an increase in the margins overall. So keep an eye on the margin level. But as per the poll, it comes at around 10.6%. PAT is expected to grow by 30%. That will be pure jump from the EBITDA fall. Also remember one key thing, apart from this, there will be any announcement on the launches. That is one thing which street will be keenly watching, especially in the electric vehicle segment. Also, price hikes going ahead, how will that thing pan out? That will also be one key element which the street will be keenly watching. In terms of valuations, not very cheap. From 13 times at the beginning of the year, now it's trading at around 17 times FY19 multiples. So keep an eye on any disappointment. The stock is expected to fall. Back to you.
All right, Naveen, and what are you expecting from Bharat Forge?
Bharat Forge also, in fact, strong numbers. Revenue jump is expected to be 40%. Why? Two key reasons. 45% of the revenues which comes from the North American market, or there we have seen the Class 8 truck orders that has been surging on a month-on-month basis. 5-month jump is what we have seen for the Class 8 trucks. On the other hand, the domestic market also, Ashok Leyland is the best example. There we have seen a 23% jump because of the CV surge or in the volumes there, which will lead to a Bharat Forge giving a revenue growth of 40%. That is what the street is expecting. One auto ancillary company is Bharat Forge, wherein we are expecting an expansion in the margins. The margins are expected to expand by close to 60 basis points, around 28.5%. Why? Purely on the basis of the operational leverage that have been kicking in. The company has already expanded facilities 2 years back, and now that positive operational leverage will be clearly seen in the numbers also. Apart from this, 2-3 key things to watch out for will be the company's guidance in terms of how railway business has been panning out. That is a high margin business which the company has been pushing a lot of traction into. And apart from this, also the US business, how that is panning out. Remember, there has been increased competition in the US. Any word on that will be taken, will be keenly watched by the street. Back to you.
Okay, all right. Thanks very much for that, Naveen. But moving on, all eyes will be on Arvind's press conference today and a potential demerger announcement. CNBC TV18 learns that the board is mulling the demerger of the brand and the retail business. Varinder is here with more details on it. Varinder.
Well, Ekta, I may sound like a broken record for last 2 days. We have been mentioning this again and again. And today, there's a press conference official at 12:30 p.m. Where the entire senior management of Arvind will be there. As we've been pointing out, this is an important development. If it happens, we learn that the demerger of brand and retail is a big possibility in today's board meeting, and hence, they are meeting and having a press conference on the result day as well. The stock has been active since last 2 or 3 days, has run up nearly 10% in the last 3-4 days. Importantly, if we have to, see the businesses, one is the brand and retail and the other is textile. Brand and retail, of course, has been doing very well in terms of growth. The margins are much better. Growth has been above 20% in, what they have achieved. Going by, what analysts are expecting for FY20, the EBITDA is expected to be nearly 450 crores to evaluate as per 25 times around, which is the peers what they are trading at. The brand business is valued around 11,000, 12,000 crores. Textile business with an EBITDA of nearly 900 crores expected for FY20 is being valued around 6,000 crores. So clearly, if you just see the enterprise value for Arvind, works a bit much higher than what the current market price is right now, and hence it's a good development, big development for the company. As I said, we are, we understand this. We are keeping 1 + 1 together, because if there is a press conference, it has to be big, because all the entire management team will be there today. So let's see what happens finally from the management, and then, let's take it from there. But importantly, as I said, the stock has already run up 10% in the last 2 or 3 days. So keep that on back of your mind.
All right, Varinder, we'll keep an eye out on that. Remember, Arvind is trading at a record high, but